virtual for EPF's event announcing the dividend for 2021. EPF is the bedrock of the local national economy. Today, from our last count, from an equity position point of view, we account for about 15% of Bursa. We also hold 25% of government debt, and 21% of all debt in Malaysia. That's a fairly strong base. And that is very important because it will come into play when we talk a little bit later in terms of the impact of the withdrawals and so on. But we shouldn't forget also that EPF also plays an important role to stimulate the development of financial markets in Malaysia. We remember that our primary role is to deliver the best return that we can for our members. But in that process, we should also look at developing the local economy where we can. But the primary investment return must carry. In this instance, for the domestic market, we've also outsourced 49 billion of our fund investments to external fund managers, thereby developing players in the domestic fund managing market. And since 1996, allowed members to invest through our members' investment scheme of 104 billion ringgit. This provides a lot of liquidity in the market and develops a fairly strong franchise, and we see a good development of competent, strong financial players in Malaysia. Specifically for 2022, we're going to take that a little bit further because we're now looking at private equity in a slightly different form. One thing that we've noticed in Malaysia is we haven't seen enough stimulus going into the Bursa. And there seem to be investment traps that once things go into the VC, after that VC stage and going to a pre-IPO, there is a gap in the market. And I think towards the later stage of that pre-IPO, there is a space that EPF can play, because we see that we can manage the risk element and get fairly good returns for our members. But in that process, we also help generate the engine that will feed Bursa. And then Bursa comes back again to that 15% ownership that we actually have, because we want that to also run in a better form. So we're dedicating about R1 billion this year to help do it. And we're working through specific funds to actually promote that and looking at companies which are at that next stage are ready to do. We all know 110 billion, 101 billion is from the 3 withdrawal schemes, 9 billion coming on from reduction in statutory contribution rates. Overall, 7.3 million people applied for Lestari, Sina, or Citra. When I talk about the impact of this, the 110 billion, what did we have to do? As I said, from an asset point of view, EPF wasn't under tremendous amount of strain. It was a matter of managing liquidity. But liquidity has consequences. And for us, we had to make choices in terms of how we made the liquidity available. And the first most important thing that we had to do, we had to take cognizance of the fact that we did not want to rattle the local market, because we have a large footprint. Anything that EPF actually does has massive ramifications on the ground. Therefore, the first priority was brought back. We brought back 22 billion ringgit for our foreign investment. This investment was built up over quite a number of years. And some among the investments, I must admit, was not at the state of maturity, but we needed the liquidity. So the trade-off was there. It was not probably at the most optimal time. It was positive, because you'll see it in the results. But maybe we could have made a little bit more. If we had let the investment mature. And the timing of the maturity is something that we choose, not because of other events putting that into play. So as I said, financing the COVID-19 withdrawals required trade-off. Domestically also, we had to make choices. Because we had to fund the 110 billion, we reduced participation in the domestic capital market. All in all, 16 billion. If we compare where our position was the previous year and this year, we were down by about 16 billion from a total investment point. If you look at injections, we could not really invest in the market because we didn't have capital to be able to put back into the market. And there was no support for our external fund manager because the liquidity need drove us, yeah, to stop that part. Yeah? Remember again, we are a big player in the local market, and we stopped. The local players also had to hold back. There was no liquidity to the play.